Hi everyone, here's what's crazy. While everyone's panicking about market volatility and rate cuts, there's a $71 billion giant that just keeps growing. And I'm about to show you why SCHD could be the most misunderstood opportunity in today's market. Here's the thing that blew my mind when I saw the latest data. While 90% of funds in SCHD's category have outperformed it recently, billions of dollars are still flowing into this ETF every single month. Smart money doesn't make mistakes like that. So what do they know that retail investors don't? I'm about to reveal why institutional investors are quietly loading up on SCHD at $27.88, even as financial media calls it underperforming. By the end of this, you'll understand exactly why this could be your biggest opportunity of 2025. Problem agitation? Problem number one. SCHD has been underperforming. Why would I buy it? Here's what everyone gets wrong. Yes, SCHD fell from a 5-star to a 4-star Morningstar rating. Yes, it landed in the bottom 25% of its category, but here's what the data actually shows. Solution for beginners? SCHD's 4.14% year-to-date return might look weak, but that's exactly when smart money buys. The fund tracks the Dow Jones U.S. Dividend 100 Index, which requires 10-plus years of consecutive dividend payments. These aren't growth stocks. They're wealth preservation machines. Solution for intermediate investors? Look at the sector allocation. SCHD is underweight financials by 15% compared to large value funds. When Trump's deregulation policies kick in fully, this positioning could flip from weakness to massive strength. Solution for advanced players. Use options strategies. With SCHD's low volatility, 0.719% daily average, selling covered calls on positions can boost your yield from 3.72% to potentially 8 to 10% annually. Problem number two, the yield isn't high enough compared to other options. Wrong thinking. Here's the data that changes everything. Solution for beginners. SCHD's 3.72% yield is 3 times higher than the S&P 500's 1.2%. A $100,000 investment generates $3,720 annually versus the $1,200 in SPY. That's an extra $2,520 per year in your pocket. Solution for intermediate investors. Compare it to bonds. The iShares 20-plus year Treasury, TLT, lost 2% this year, while SCHD gained 4.14%. You're getting better yield and capital appreciation. Solution for advanced strategy? Layer SCHD with international dividend plays. Add VYMI, 4.17% yield, and SCHY, 3.88% yield for geographic diversification. This creates a 3.8 to 4% blended yield with global exposure. Problem number three, tech stocks are where the real money is. Here's what the smart money knows that you don't. Solution for beginners. SCHD holds quality tech names like Texas Instruments and Cisco, companies that pay dividends and grow. You get tech exposure without the insane volatility. Solution for intermediate approach. Use a barbell strategy. Keep 60% in SCHD for stability and income, 40% in QQQ for growth. This gives you the best of both worlds. Solution for advanced play. The real opportunity is the rotation coming. When tech finally corrects, and it will, dividend aristocrats become the safe haven. SCHD's holdings have survived multiple recessions. Tech darlings haven't. Authority building. Here's the data that completely changed my mind about SCHD. Statistic number one, assets under management jumped from $68 billion to over $71 billion in just months, despite underperformance. Institutional money doesn't chase losers. Statistic number two, analyst consensus shows a moderate buy rating with price targets averaging $30.40. That's 8.88% upside from current levels, around $27.88. Statistic number three, SCHD's expense ratio is just 0.06%. That's only $60 per year on a $100,000 investment. Compare that to actively managed funds charging 1 to 2%. Statistic number four, the fund underwent a 3-for-1 split in October 2024, making shares more accessible. Post-split performance has been solid with controlled volatility. Statistic number five, 52-week range shows SCHD trading between $23.87 and $29.72. At $27.88, you're buying closer to the low end of the range. Statistic number six, Current top holdings with highest upside potential include Coterra Energy, that's CTRA, Kforce, KFRC, and Amerisafe, AMSF. Names most retail investors never hear about. Statistic number 7, SCHD's Smart Score of 7 indicates it will likely perform in line with the market, perfect for risk management. Statistic number 8, the fund has delivered 12.57% average annual return since inception in 2011, beating most high-performance growth funds over the long term. Solution presentation. Play number 1, the core income builder, conservative. Allocate 40 to 50% of your dividend portfolio to SCHD. Set up automatic dividend reinvestment or DRIP. Target time frame 10 plus years for wealth building. Expected outcome 3.72% current yield plus potential capital appreciation. Play number 2, the volatility harvester, intermediate. Use SCHD as your base holding, 30 to 40% allocation. Sell covered calls on your position during high volatility periods. Buy more shares on any dips below $27. Expected outcome 6 to 8% total returns with reduced portfolio risk. Play number 3, the sector rotation strategy, advanced. Build around SCHD's underweight positions as your opportunity when financials and cyclicals rally. SCHD benefits disproportionately layer in SCHB or SCHA for small cap exposure SCHD lacks. Expected outcome, capture upside when value rotates back into favor. Play number 4, the international dividend combo, global. Core position 50% SCHD. International exposure, 25% VYMI, 25% SCHY. This creates global dividend exposure with currency diversification. Expected outcome, 3.8 to 4.2%. Blended yield with international growth. Play number 5, the retirement income machine, long term. Ladder into SCHD over 12 months, dollar cost averaging. Target allocation, 60% SCHD, 20% bonds, 20% growth. Use quarterly dividends to either reinvest or fund expenses. Expected outcome, sustainable 4 to 6% portfolio income. Implementation timeline, Week 1, open your brokerage account and research SCHD's current holdings. Month 1, start with a 5 to 10% position to test your comfort level. Month 3, scale up to your target allocation based on performance and market conditions. Month 6, evaluate and potentially add complementary positions, VYMI, SCHY, etc. Year 1, review performance and adjust allocation based on your income needs. Close with urgency. Here's my bold prediction. SCHD will hit $32 plus by Q2 2026. Here's why this window is closing fast. The Federal Reserve's rate policy is creating a perfect storm. As rates potentially pause or reverse, dividend stocks become more attractive relative to cash and bonds. SCHD's quality focus positions it perfectly for this shift. The institutional flow data shows $2 to $3 billion flowing into SCHD monthly. When retail investors finally figure out what institutions already know, this buying pressure will drive prices significantly higher. But here's the thing. You have maybe 6 to 8 months before this becomes obvious to everyone. Once SCHD breaks above its 52-week high of $29.72, the momentum traders pile in and your entry opportunity disappears. The smart money is positioning now. The question is, will you join them, or will you wait until CNBC starts talking about the great dividend comeback when it's too late to get in at these levels? Your next step? Research SCHD's current holdings. Understand the strategy and consider starting with a small position. This isn't financial advice, it's educational information to help you make informed decisions. Always consult with a qualified financial advisor before making significant investment changes. The opportunity is here. The data is clear. The only question left is, what are you going to do about it? This content is for educational purposes only and should not be considered personalized financial advice. All investing involves risk, including potential loss of principal. Please consult with a qualified financial advisor before making investment decisions. Please like, share, and subscribe. Here's to your investing success. Profitable investing.